Welcome to the Be Smart podcast, how not to be an idiot with your money. We've got a special guest here today. Tars has joined us.
Yep, here's Tars. What's up, buddy?
Good news, Jared. I am all squared away on Nashville for next month. Tickets are booked, so I'll be there. It should be exciting.
Yeah, it's going to be great. Music is set to go for the party. I guess we got a big reveal. We got something we got coming out, so we're going to be making preparations for that. I'm going to get the whole team together in Nashville. I guess Ed is getting an Airbnb. We're all going to get together there.
Are you staying there with us?
No, I'm staying at a hotel. Yeah.
Nice. Yeah, I was just thinking, like, how hilarious. I watched some Night We Met Instagram videos just to get a sense of this place. I'm just thinking how hilarious the crew is going to be walking in there. Like, me, Ed, Adam, Mike, Artem, I believe, is going, our video producer. I just imagine it's going to be like the poor man's version of the slow motion walk at the beginning of Reservoir Dogs. Just so ridiculous, but it should be a lot of fun.
I mean, I'm hiring a videographer to take some video that I can use for my website and stuff like that. So if you see a 6'3", 350-pound guy with a camera, that's what he's doing. He's really good. So we're going to get some great footage out of it.
Nice. Can't wait. It's going to be a lot of fun. You want to get down to brass tacks and go into the market headlines?
Yep.
Our first one, credit scores decline for millions as U.S. student loan collections restart. The Federal Reserve Bank of New York reported that in the first 3 months of 2025, 2.2 million student loan recipients saw their scores drop by 100 points, and an additional 1 million had drops of 150 points or more. Also, about 1 in 4 people with student loan accounts were more than 90 days behind on payments at the end of March. Do you anticipate the effects of resumed student loan collections to begin rippling through the U.S. economy in the next several months, especially when consumers start, kind of prioritizing loan payments above all else?
Yeah, that's actually really interesting. So first of all, like when the student loan payments were paused, I mean, if you were a borrower, you had the option of taking the $500 a month and saving it in case the student loans became unpaused and they started collecting again. So over the course of 4 years, you could have saved $20,000 or $30,000, but of course, everybody spent the savings. So now people are totally stuck. I think it's going to have an effect on confidence. To a certain extent, we just had some Michigan sentiment numbers. They were actually above what was expected. But I think it's going to have an effect on confidence. I think it's going to have an effect on the savings rate. I think it's going to have an effect on consumption. But we're not talking about like, oh my God, we're going into a depression. I mean, it's going to be a pretty muted effect. I mean, I would say less than 0.3% of GDP, right? Really what you're going to hear is a lot of belly aching.
Let's go into housing a little bit. New real estate math, 500,000 more sellers than buyers. According to Redfin, the U.S. housing market had nearly 500,000 more sellers than buyers in April, the biggest gap on record in seasonally adjusted data going back to 2013. Even though supply is rising, the new listings haven't been enough to jolt the housing market. Existing home sales in April fell for the second consecutive month, notching the lowest sales pace for any April since 2009. So there's a lot of talk that home buyers now have the upper hand in many parts of the U.S., I think excluding parts of the Northeast and the Midwest. But it still seems many buyers are priced out, and with home prices still so high, I have my doubts that we're going to see any buyer demand surge in the near term. It feels very wait and see to me. What do you make of the housing market right now? What are your thoughts?
Yeah, I mean, buyers are waiting for prices to come down, which they may or may not, and they're waiting for interest rates to come down, which they may or may not, But we are at pretty much peak unaffordability. The funny thing is that you started it off by saying we have 500,000 more sellers than buyers, right? And yet prices are still pretty much unchanged. Okay. which there's an old saying on Wall Street, like if somebody said, why did the market go up today, and like the canned response is more buyers than sellers, that's actually not true, right? Like it's not that there were like numerically more buyers than sellers. The buyers were buying with greater urgency than the sellers, right? And what we have kind of in the housing market is a stalemate where there's no particular urgency for the sellers uh, to move their house, right? Like they're fine. They're also fine waiting. So it's a little bit of a stalemate, and it's going to be that way until you get a catalyst, until interest rates come down, or God forbid, we have some big geopolitical problem that causes a recession, or who knows. But for the time being, it's a stalemate.
It sounds like Tars has something to say about that.
You can hear him.
Yeah. So just out of curiosity, when I saw this, I got on Zillow to see if there were any homes up for sale in my neighborhood, and there are several more than usual. But I have seen that some of the prices have been cut, but they're still very pricey.
Yeah.
Last market headline: red versus blue is dividing stock portfolios like never before. Some key points here. A Gallup poll shows a large partisan divide in stock market optimism, with Republicans more bullish than Democrats. Some investors are making portfolio decisions based on political views, and data suggests that investment strategies based solely on political leanings can underperform simple buy and hold. How bad of an idea is it to play politics with your portfolio?
Well, I don't think people do it really on a conscious level. I think they do it more on a subconscious level. Like if you're a Democrat and Trump got elected, like you're sad, and you think Trump is a ding dong and he's going to mismanage the economy, and so you're just sort of like subconsciously bearish. So you're going to be have a lower weight in stocks and a higher weight in bonds or something like that. But I mean, one of the challenges is to not let your political views affect your investment decisions at all. I mean, think about if you were a Republican at the start of Biden's term and you're like, Biden's a communist, he's going to destroy the economy. No, stocks went straight up for the 4 years that he was president. You know what I mean? Like, even though like Republicans have historically been free business or free market, over the last 100 years, stocks have actually underperformed during Republican administrations. I think it works sometimes. Like when Trump was elected in 2016 and the market went straight up for a year, like I think that's one of those situations in which it worked. But yeah, I mean, you just have to be as unbiased as possible. I mean, look, like Trump has policies that are not pro growth, you know. But anyway, we could talk for like 45 minutes on this. It's a lot.
Let's get into commodities as our main topic and whether they will outperform stocks. So I want to talk predominantly oil, gold, and platinum. But first, broadly speaking, how cheap are commodities right now relative to other assets? And how do you see commodities performing over, say, the next several years, maybe even longer?
I would say commodities were at their cheapest in September of last year. I think that was the bottom. They're up a bit since then, not a lot. There's a lot of evidence that hard assets and financial assets go in cycles. So you'll have a period of about 20 or 30 years where financial assets outperform. Then you'll have a period of about 20 years where hard assets outperform. And, we've had a period of underperformance of commodities really going back to almost the 90s. And I mean, there's charts of this. You can look it up on Twitter or on Google or whatever. Like, commodities are historically very, very cheap relative to stocks and other financial assets. So I'm super bullish on commodities. I trade commodities. I only trade them from the long side. I am never trading commodities from the short side. And there will be, there is going to be some catalyst that is going to be a big inflation event at some point in the next couple of years. and commodities are going to rip. Now, you mentioned platinum. Platinum broke out of like a 10-year downtrend, and it was up 25% in a couple of weeks. That's a good example of what can happen. I mean, that's a very specific platinum specific story. But there's examples like that. Coffee did that in 2024. Cocoa did that in 2023. When you get these bull markets in commodities, they run for a really long time.
Platinum's up 38% year to date. Let's see, it's
Awesome.
up, 26 plus over a month. So it's ripping. Yep. Can you break down this comparison between platinum and cocoa a little bit more?
Yeah, cocoa, if you looked at if you were doing technical analysis on it and you looked at a chart of cocoa, it broke out of a 45-year consolidation, and then it quintupled. It went up 500% in less than a year. I don't have a view on cocoa. I don't have a position in cocoa. Platinum, platinum is 90 times more scarce than gold, right? And platinum used to trade above gold. It used to trade at a premium to gold. Now it's at a steep discount to gold. And pretty much most of the platinum in the world comes from one place, comes from South Africa. And South Africa is getting to be a basket case, right? So you are looking at the possibility of, in a couple of years, where supplies of platinum could be severely restricted. And the demand side of it is, I think EV demand is completely saturated at this point, and people are going to be driving hybrids more, and hybrids, catalytic converters, are big consumers of platinum. So that's the fundamental bull case.
So it looks like on May 30th, platinum went from about 1,075 to about 1,300 by June 12. This dipped a little, but it's also rebounded a little. Do you see this? This chart's kind of wild. It's like straight up and to the right. Do you see this continuing?
Actually, I think we're going to pause here and consolidate for a couple of months. But the highs are the long-term highs are not in platinum.
So you've written before that a bet on commodities is a bet against human ingenuity, and that when commodities are rallying, things are typically not going so well. Does this play into your thesis, this idea that progress is going in reverse?
Yeah, and I think the best example of that is like corn, right? Like if you look at a chart of crop yields going up over time, we are growing more and more corn with less and less acreage to the point where it's absolutely absurd. We are producing enormous amounts of corn on, there's parts of the United States that have been reforested because we're not farming that land anymore, right? It's incredible. So this is what technological progress does, and it's really worked that way for the last 100 years. But you kind of have to ask yourself, what would make that go in reverse? Like, what would make those technological gains halt or go in reverse? And I don't know the answer to that. Usually the answer is when the government gets involved and starts passing regulations and starts, but who knows? By the way, I think it was a big mistake to let Tarzan here because he won't shut up. So
Let's get into oil a little bit. So oil markets remain on edge with the back and forth between Israel and Iran. However, so far, critical crude oil exporting infrastructure has been spared, and there's been no blockage of the vital Strait of Hormuz. Oil is down today. Crude oil is down about 1.85%, but the conflict in the Middle East could very well escalate further. Considering the risks, would you rather be long or short oil right now?
I'd rather be long. And it's not because I'm bullish. It's just terrible risk reward to be short, right? But the thing with oil is that people have learned over the last 10 years or longer that you want to short geopolitical risk, right? So do you remember like back in 2000, I think it was 2019, when Trump ordered the killing of Soleimani, that Iranian general,
Yep.
right? Okay. So oil spiked like $5 or $6 on that, and then immediately it went down, right? And there's countless examples of that over the last 10 years where there was some geopolitical flare up and oil gapped higher and then it gapped lower, right? So people have been trained to believe anytime a geopolitical event happens, you just want to short it, right? And that's going to work until it doesn't work, you know. So I I have no desire to be doing stuff like that. So you asked me, gun to my head, would I rather be long or short? I would rather be long, but that position would probably lose money. But I would lose less money than if I was wrong and short, in which case I would get my head blown off and it would be catastrophic.
And then gold, it's flirting with an all-time high. It has pulled back a little today, a little over 1%, but I'm guessing nothing has changed with your outlook on gold.
Nope.
And just to close this segment out, are there any commodities that you're not bullish on?
I am not bullish on the meats. So cattle and hogs. I am not bullish on the meats. But that's pretty much the only commodities that I'm not bullish on.
For the week ahead, we've got consumer spending data on Tuesday, including U.S. retail sales and the latest homebuilder confidence reading, the Fed's interest rate decision on Wednesday, and possible trade developments as negotiations continue between U.S. officials and key trading partners. Also on deck is the Juneteenth holiday, which means markets are closed on Thursday. We talked about the Fed last week. There's really no need to rehash that, but
let's rehash it. Let's rehash it.
Sure.
So I think that expectations for the Fed are very hawkish. I think, everybody thinks that Powell is going to give the middle finger to Trump, like until his term is over, and they're not going to cut rates. Look, the data has gotten pretty soft since the last Fed meeting. Claims numbers have picked up. The payroll number was not great. Outside of the sentiment number, like it's been pretty terrible. And now you have a war in the Middle East. Like I think the dot plot that comes out with the Fed meeting has a decent chance of pricing in one more rate cut. I think it could be a dovish meeting this time.
Anything off markets going on with you?
My wife is overseas. She's in the Middle East, so I'm a little worried about that. She's supposed to be coming back this week. But aside from that, not really. I'm supposed to go to New York at the end of the month. Totally unprepared for that trip. And then we got Nashville in July. So, and 1 week, Rule 62. Yes.
I'll be up at midnight hitting that buy button for the physical copy.
This is one of these books. I said it about Those Bastards, and I was right. When Those Bastards came out, I said, look, like, you are really going to want to buy multiple copies of this to hand out to kids, nieces and nephews, sons and daughters, kids, like this. These are great, great, great life lessons. And this is not a buy one book. This is a buy 5 or 10 book. So you just got to trust me on this. And with Those Bastards, people did trust me. That book actually sold a lot of copies. It really did. And there were not too many people that were unhappy with it.
That about wraps it up for this week. Who you got tonight, Pacers or Thunder?
Where are they playing?
Oklahoma City. Thunder, it's a 9.5 spread in favor of the Thunder.
I'll go with the Thunder. Go with the Thunder. Yeah.
That's probably a safe bet. We'll see how it ages tomorrow, though. Everyone, if you're watching on YouTube, please like and subscribe, drop us a comment, and we will be back next week. Take care, Jared.
See ya.